What's up, guys? It is the 27th of December. Hopefully your Christmas kicked ass. I had a really good time with the family. Yesterday, my wife worked, so day after Christmas. I didn't realize it was kind of a day off. It's a floating holiday for the company. I jumped in, started making calls. Bree, my assistant, was jumping in, making calls. And then she's like, how come nobody else is on? Like, I don't know. So she did some research and found out it was a floating holiday for the company. So we got some stuff done early in the morning. By 10 a.m., I was kind of done with the day I had. I had another couple of late calls, but really kind of a cool, simple day. I spent the day with my youngest, Maggie. We watched some 80s movies, man, Uncle Buck, and then we got to Top Gun and then did, Top Gun, the second one. So just a full day of just watching movies, hanging out with my daughter. I had a really good time. And then wife come home late from work or later, and then we had some sushi and called it a night. So that was my weekend. Hopefully yours kicked ass. Mine, I really enjoyed. So not wearing my normal garb. I'm wearing my F shirt, which you guys see now and again. Why am I wearing the F shirt? Because if you're looking at things to try and accomplish your cash flow objectives, but not looking at anything else with respect to your real estate investment portfolio, and you get suckered into the arms like I've been talking about, that's what you're going to get. You're going to get the F. You're going to F yourself at some point with that. I'm not convinced. And I'll keep saying it. I keep saying it. And I keep saying it. I sound like a broken freaking record here. But if you're getting suckered into the arms, that person, they don't give a shit about you. They don't care what's going to happen to you down the road. They don't care to go through the extreme depth of conversation and numbers and detail to figure out where the value of your real estate investment portfolio is when it comes to the leverage without just looking at cash flow. Why? Because it's easy to sell you on cash flow. Easy. It's easy to put a person in a position where they screw themselves because they don't realize exactly what they're doing, especially when you get data coming from all these places that says it's going to work out. We don't know how it's going to work, right? What do we got going on right now? Out there in the market, we got the Case-Shiller numbers come out on home values. Home values continue to do well, interestingly enough, up about 9% year over year. Now, they've gone higher, right? We've seen home values or home prices, I don't call them values, prices be much higher and see month over month gains, but then they started to shrink a bit. And why have they shrunk a little bit? Because, well, in reality, the demand is not where it was at one point. The other thing let's think about these interest rates. People bitching about the interest rates going up. What was funny is people, when the rates were low, would listen to their realtor when it says, hey, when you come to the table to make an offer on this house, be ready to make an offer $30,000 over list, period. And then it was not uncommon to see people pay $100,000 over list price. And that was fine. Nobody fired their realtor, got mad at the realtor, went realtor hunting when the realtor said, be ready to go $30,000 over list just for your first offer, potentially pay $100,000. Everybody was cool with that. The rates were low, which drove the prices up. So in reality, you really didn't save anything by getting a low rate because the prices went through the roof. Now that rates are going up, prices are coming down to a little bit, a little bit more realistic level. Now, let's take a look here at what chart I've got up. Let me pull this from the St. Louis Fed. And this illustrates what the housing market has done over the years. It goes all the way back to 2017. As you can see, we hit seasonal points where it will come down anyway, right? You get to a peak, seasonally it comes down. Get to a peak, seasonally it would come down. Here, this marks a recession here in 2020, the shaded areas. So when you're looking at these charts from the Fed, you'll see these shaded areas referencing recession. We should have a shaded area up here, but we don't, because they redefined what a recession is. But look, we always had a dip towards the end of the year. Now, where are we at? Another dip towards the end of the year. It's a lot sharper dip because of what's been going on with the interest rates. But we look at what happened in 2022. We had this crazy buying frenzy. We've been on a buying frenzy for years. But in reality, had this crazy one. It's dipping back, but we're still quite high. We're still higher. We're still having home values go up. You take this, you just draw a line from here. I'm going to attempt this line here. I'm not doing so well with it, but look at that. So literally you can see it's all an upward line, right? So either way you look at it, it's still an upward line. We're still having properties prices going up, home values, if you want to say that, are going up. So if anything, the housing thing is still doing well. Having money in real estate is still doing well. No matter what you listen to out there in the market, there's a lot of fear mongering going on. A lot of people freaking out about energy is the one I'm worried about most. Energy, when we're talking about food, water, basically food, shelter, fuel, those kind of things. Fuel is the one that I'm really worried about. Water, I'm really worried about what's going on out there. So if something happened along those lines, everybody that you hear that's supposed to be the guru on these things is saying, get tangible assets, get real estate. Real estate is something you definitely want to have your hands on. So you're in the right path there. Just don't F yourself with the arm. Let's take a look at the bonds real quick and see how that chart's working out. So this was our support line last week. We kept bouncing off of that. Look at where our support, we're below it now. I'm afraid this is going to be resistance at this point. So I'm going to turn the sucker red. I think that this a battle to get past it. I hope it's not. But look, we got moving averages to fight. We could be here down in this lower channel for the foreseeable future, following this pattern back here. Now, we talked about stochastics before, so let's talk about these. These represent one trading day. We see what happens in that day, and then we have these different points where other people have explained to me, these are your points where traders would have a buy order or a sell order. You have your trend lines. Everything acts as a trigger to a trader to say whether or not they're going to buy or they're going to sell. So we're trying to get into the mind of the trader, understand what they may or may not do. So we have this line, which used to be support. Now that we're below it, they're thinking that might be a good place to sell because that's where others might sell. This might be a good place to buy. That's where others might buy. Then we have the stochastic trends down here. Well, we're down in this deep territory. So this is oversold. We're in an oversold spot. Hopefully at some point here, there'll be some trades that'll push us above the 3-day moving average. That would push us to a point where now maybe get a lot of people start buying into the market. All right. So if they start buying into our interest rates, will start getting better. We don't know, but I'm going to say we're going to go sideways a little bit worse than we were last week. But going into the end of the year, stay strong, keep pushing hard. 30-year fix is always going to be your friend. I'll just get back with you guys again on Friday and let you know where things settle out the rest of this week, but this is where we're starting out. Thanks, guys.